to Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And that means we're coming in to talk about what's going on with your money on Wall Street this morning. Wasn't a bad day yesterday. We were kind of worried at the beginning of the day. Let's check in with Philip Statler from Statler Financial Services in downtown Sebring and see his thoughts on the matter. Good morning, Philip.
Hey, good morning, Dave. It was good to finish up the quarter on a high note. I wish it looked like we were going to start the next quarter on a high note, but it's not looking that way right now. But hey, you can't get everything you want, and so we'll be happy with finishing the second quarter. I'll get my tongue here right in a minute. On a high note, and I think I saw somewhere it was the best half year we've seen in quite some time.
Absolutely. The Dow closed out its best first half of the year since 2021. S&P 500 and NASDAQ had their best quarter in like 6 years. And we finished it off with a pretty good bang. Dow gave us a new closing record yesterday. We're now starting the morning out at 52,319, gained 136.5 points yesterday. The S&P was up by 59 points. NASDAQ was up by 394 points. I didn't check the Russell because I got occupied, but I got to assume a rising tide lifts all the boats, including the little ones, didn't it?
Oh, yeah. The Russell was up almost 0.5% yesterday.
Not bad at all. So we ended up the second quarter. That's right. Keeping track of what part of the year I'm in. Ended the second quarter with kind of a bang, and like we were saying, I mean, best quarter in years for two of the three indexes, and the best first half in 6 years for the blue chip Dow. I mean, can't complain too loudly. And then we start out the morning this morning with kind of a kissing your sister report on the employment number, the ADP big payroll service that guesstimates what the private sector was doing. We got pleasantly surprised for the last 2 months. As a matter of fact, it almost looked overheating. This month, we kind of came back down to earth. They showed 98,000 new private sector jobs added to the economy last month. We were expecting, one of my sheets said 110,000, another one said 120. It was a miss one way or the other, but, after two really pleasant surprise months in the last two, I'm really not overly disturbed by that. Are you?
No. In my mind, Market Watch had it at 110. So 98,000 compared to 110. Not a drastic miss, but I will say that is off significant. I'll say significantly, probably 25% from where it was in the prior month, where it was 122,000.
Yep, and like I said, both the prior month and the month before that, the market wasn't expecting diddly squat, and the ADP number kind of slayed it. So, I take it over a 3-month rolling average, and things don't look all that bad, even with a relatively small miss this month.
Yeah, but you do. The other thing we didn't, we were hoping the JOLTS report would come out yesterday. We would see the number, but if it did come out yesterday, we sure as heck can't find the number. But the other thing that we had yesterday was the consumer confidence number came out.
Yes.
Slightly off. Slightly off.
Oops.
The expectation was for it to be 94.2. It came in at 91.2, up from where it was the previous month, but still off of expectations.
And I would kind of expect to see it go up a little bit with the hankering for peace in the Iran situation. I would kind of expect consumer confidence to have increased more than that, wouldn't you?
I would have thought so too, but I think we continue to see oil prices up and then down and then up and then down. I think there's still some issues there about what's going to happen. I don't know that that's a sealed deal, even though they keep telling us it is.
We keep hearing the name, it's sealed, and then something happens and they close down the strait again. And again, we got to keep in mind, it's a really narrow corridor that they've got opened up and demined. So even when there is relative peace in the valley, we're talking about only about 25% of the usual oil flow in the terms of the boats getting through the Strait of Hormuz. That's only about 25% of what we had before we started shooting at Iran. So, yeah, the strait is open this morning, but it's not open to the extent that it has been. I mean, you used to get 2 and 3 abreast through there. Now we're taking them basically one at a time down a really narrow corridor because we don't have the mines pulled out of there yet.
That's right, single file for sure. Hey, the other thing, Dave, is, and we've talked about this a little bit on and off, but interest rates, they had ticked down towards the end of last month. They had gone down by probably about 2/10, almost 0.2%, like in the mid 4.85, somewhere in that neighborhood. They're back up to 4.99% on the 30-year right now.
And I am seeing a knee upward over the futures market on the 10-year, which my tip sheet tracks. There's kind of a big knee upward. Something is pushing our interest rates up even on the short-term basis right now. And some of that's got to be expectations that the Federal Reserve is basically going to say to heck with the notion of what President Trump wants for an interest rate cut. We're going to start raising them because we're worried about inflation, which you and I would both agree is probably smart.
Exactly, but nobody wants to see that, especially the traders.
Absolutely. And it's something you and I have talked about for eons now. When we do boost interest rates, even when they're needed, that ends up screwing up the federal budget, something terrible, because every time our bonds roll over at a higher interest rate. And the single biggest thing that we pay out of the federal government is interest on the federal debt, which you and I have been banging a drum on for, well, about as long as we've known each other, right?
Yeah, exactly. We keep talking about the interest rates are just, they've been artificially low for a long time.
And they just don't listen to us no matter how much we talk about. Hey, I had interesting tidbits coming out of this. We talked about yesterday about how the Magnificent Seven has been kind of in the penalty box, using hockey terminology, and they've been getting beat up lately. Tech stocks in general, on the other hand, have just notched their best 6 months since 2023. So maybe it's just the big ones that we're starting to sell off. Evidently, technology stocks are not a bad place to be, but just watch the big ones, because the bigger you get, the harder you fall, I guess.
Well, that is true. I mean, I just trying to run a few numbers here and there. I just ran the NASDAQ, I think it's the NASDAQ 100, up a little over 18% for the first 6 months of the year.
I could live with that. My IRA did that for me. I'd be a real happy camper. Doesn't seem to be doing that, but that having been said.
That's because you don't need that much risk. You don't need that much risk in your portfolio, Dave.
That's because I'm old. Yes, you're absolutely. I'm on the conservative side by design. Bunch of earnings are starting to come out little by little, but it's little by little by little. I gather Nike actually came out of the box and said we had a good quarter. How'd that happen?
Well, they did have a good quarter as far as earnings and revenue beats, because they beat on both of those things for their fiscal fourth quarter. However, when you start slicing and dicing where things are coming from, they had a large decline in sales in China, about 12% sales decline.
Ruh-roh.
Yeah, not good. So they were down as much as 3% earlier today and yesterday, but they're still down. They're down about 1.3, 1.35 right now.
You know, that if you want a definition of snake bite, there you go. They got hammered earlier when we started tariffing the crud that they make in China and bring over here. That messed them up for a few months. Now that we got the tariffs under control, now they can't sell their stuff where they make it.
Exactly. Yeah.
I kind of get the feeling that's not my favorite sector to be into at the moment. Any other
Constellation alcohol. Alcohol, there's your sector, Dave. Constellation Brands. They had a good quarter, beat by 23 cents a share, came in at $3.43. Revenue was higher too. Expectations for the full year were within what the estimates were, so all good news there. They're trading up 3.1% this morning. I'm trying to see if there's any other really no, a tidbit here though. Shutterfly and Getty Image, Shutterstock, which I think is probably Shutterfly, and Getty Images tumbled after they called off their merger. So that's Got Shutterstock
That's,
down 32%, whatever it is, and Getty Images down 5.5%.
I know Getty is the place that every time we put something together, it's where we go to steal stock pictures, and I think
Yeah,
Shutterstock is the same place. You can
gotcha.
actually buy it too, and then you don't get the watermark. But it's everybody that does graphic layout stuff knows those places as much as anything. Well, let's reset the table for the morning. Blue chips and tech stocks and everybody was up yesterday morning and yesterday afternoon at the close. 45 minutes before we open this morning, what are we looking at?
Not so lucky this morning, Dave. We are going to start the morning and start the quarter off, it looks like on a down note. The Dow right now is down 0.3%. The S&P 500 is down almost 0.4%. And the NASDAQ 100 is down almost 1% this morning. The Russell 2000 is down about 0.3. So definitely red to start the morning. On the other side, we've got silver down almost 0.9%, $59.38 an ounce. Gold's flat right now at $4,040 an ounce. And crude oil's down 1%. Got to like this number, Dave. $68.75 a barrel.
Yeah. Time to fill up the car quick before it goes back up again. Crossed upon the Asian rim was a decided mixed bag, more red than green, though, this morning. The Chinese markets were probably the poster child. One was up by 0.5%, the other was down by 0.5%, so call it net flat. Over in Europe, another mixed bag going out there. The average European index, though, is in the red this morning by about 0.5% halfway through their trading day. Getting my retirement together counts for a lot, and like you said, now, as old as I am, I don't need a lot of risk in mine. Other folks, younger side, well, you can afford to take a flyer on some stuff. I need your eyes to be able to get a plan together. How do I find you to do that?
Devin, give us a call at 863-382-0037. Schedule 30 minutes. We'll talk them through, see where they're at, see where they need to be, and if they're on the right track to get there. And then catch the Statler Financial Radio Show this weekend. We'll talk about financial independence on News Talk 7:30 a.m. and 95.3 FM, and that's at 6 a.m. and noon on Saturday, 10 a.m. Sunday morning.
And then tomorrow morning, it's Jobs Day because they're doing the government data dump a day early. So we got a lot to talk about here, same time on Light. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week is going well. Welcome to the third quarter. Join me again tomorrow. Bye now.